Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, February 27th, 2017. It's about a little before 2:30 Eastern Time as I'm starting this video, and I just figured it'd be a good time to do an update on gold, some of the other precious metals such as silver and platinum, as well as the mining stocks. So let's go ahead and dive into the charts. We're going to start out here. We're looking at a daily time frame of gold. If I don't make mention, it's right up here in the upper left-hand corner, the time frame that we're looking at. And I'll probably just toggle between the daily and 60-minute charts today. What stands out to me on this chart is these three horizontal lines in close proximity. This is what I refer to as a resistance zone when you have a lot of levels. They define gaps, reactions on candlesticks. So really going back this far, you can see this is the zone. Add to that gold is quite overbought. We had an overbought reading here, which was pointed out at the time. We didn't have any divergence, but yet we did have a pullback. We were overbought once again right there, and you can see there's that little peak right there. We did get another pullback, and once again. So now this is what I call a triple tap. Three taps of overbought readings, or really one extended overbought. The RSI reset a little bit back here. We had a pullback to the 50 level that at times often contains pullbacks. You can see that to be the case back here in the past and quite a bit. So pretty healthy price action so far, and gold continued higher. And that was, of course, that first pullback was after that primary target right here, that big key level 115.70 was hit. So where we're at, just to make this clear, right now I don't have any negative divergences on the PPO. The MACD would look very similar. We have really this triple top high. This high looks a little bit higher. You could draw a flat line there and say there's divergences. But most importantly, the fact that I want to impress is that gold is overbought and at resistance. I've made it very clear. I've made my positioning pretty clear throughout the year, both on the front page in the trading room coming into the year. On the breakout of this falling wedge, I was long the miners, had a good run, took profits somewhere up there around when, and again, we're looking at gold, not the GDX chart, and traded them short for a little pullback. Both trades, they were swing trades, both profitable. The long was obviously a little more profitable. There was a bigger run there, and nothing big, but I got out in time on the mining stocks. And most importantly, I have not re-engaged the mining sector, and I've made that very clear. I get a lot of questions on gold and the mining stocks. And I can tell you that one of the keys to trading, at least in my opinion, is to avoid the urge to always be in the market. We call that traderitis, just the urge to constantly trading. Now, I fall victim to it at times. I'll force a trade, get a little antsy. But the best trades come when you just sit, wait patiently, wait for the charts to set up to the way you like to see the charts. And like I said, I've maintained my bias over the last few weeks. Is being slightly bearish, expecting more downside. But after covering my short positions, I've had no desire to go long or short the miners, and that remains the case today. And once again, overbought at resistance on gold, so I still remain near-term bearish. Now, gold has actually moved higher. On the last update I made, I pointed out this small rising wedge with a divergent high. You can see at this point right here, if you follow the vertical line down, you see we had negative divergence all across the board, the MACD, the RSI, my 1333 histogram. We're on a 60-minute chart now. And we did have a pullback in gold, a decent pullback. Again, I trade the miners because the miners usually get a lot more bang for your buck if you can get the call right on gold. But with that being said, this was the small rising wedge that I pointed out here. You see this line right here, that white trend line, and that. So we had a breakdown. It did correct. However, gold went on to make a new high. Now, at the time, I had pointed out, and you can see that right here, that this purple trend line down here, let's clear the ones that I just put, the purple trend line defines the bottom of a potentially larger wedge. And either way, a break and close below that trend line would be bearish. I'm referring to this trend line and still am. So what's happened, let's go back from that last update. We went down, we hit that trend line. We hit it again. We hit it a third time, and we've moved higher. And this line here, as well as that purple uptrend line, define what I referred to as a larger bearish rising wedge. I'll color code that just to make it more clear. So that's essentially what's happened. We're working our way up within this bearish rising wedge pattern, and we still have negative divergence in place, at least on the MACD. You can see down here, MACD making a series of lower highs. We do have a new high in the RSI, so that's taken out. We don't have negative divergence at this point. However, we do have an overbought reading. That's something to note. A pretty extended overbought reading on the RSI, as we did back here and as we did over here. And you can see, you go back in time, a lot of these overbought readings result in corrections. So if you ask me what I think will happen, it still appears that we're probably going to move down to the bottom of this wedge. Each and any of these horizontal lines are potential support levels, but I color code the light gray lines are more minor support, minor resistance. We happen to fail right at that line before. So be on the lookout, guys. If we do move down here, we still have the divergence in place. A breakdown of the wedge could take us all the way back down to maybe to this gap target zone. Let's see what happens. But right now, that's what we're looking at a gold, both the daily and the 60-minute charts here. If I had to go one way or the other, I'd rather be short right now, although to make it clear, my conviction's not high enough to do either. Let's jump forward. Before we get to the miners, we'll just take a quick look at the other metals. In the beginning of the year, I mentioned platinum being one of my favorites, a very clean bullish falling wedge. Prices gapped above it, moved up, hit the second target. I just added this line today as a new minor resistance level. That's around 99.85 or so, and that's what we hit. I use that level because I see a reaction here. I didn't set it arbitrarily because that's what we stopped at today. I see a reaction from below, reaction from above. I see a gap right here. Quite a few reactions from above and below and gaps as well. So that is certainly what I consider a minor resistance level, and that might it could halt this rally. And if not, there's my third and final target on platinum that I had set. I believe I put that target up at the beginning of the year. Silver, let's see. Here's silver. We've had a pretty steady rally. You know, there's been a little pullback along the way, but we're approaching a pretty significant resistance level. And let me go ahead and put the value up. That's 1765. I can see some reactions there, a gap, quite a few reactions here, numerous reactions there to the left. So similar story to gold. We're not as overbought. Well, close to it. There's the RSI. You can see similar. We've had an extended overbought consecutive series of overbought readings right there where we came up above that 70 level. So same story, overbought at resistance. If we wanted to, we could most certainly add a trend line here to watch. And again, I don't have a desire to be short, but I also would not go long at this level. And if I were long silver, I would certainly consider tightening up my stops. Let's go now take a look at GDX, and we'll wrap this up. All right, GDX, this is the daily chart, pretty well-defined downtrend line. We broke out of that downtrend line. This was a target zone that was hit earlier in the year. We had a divergent low. Again, this is all stuff that was covered back in December and at the earlier part of the year. And GDX has had a nice advance, but GDX has stalled out and has been much weaker than gold, relatively speaking, in recent days. Again, if we look at gold, just look at that recent drop in GDX we're seeing now. Look at gold with an advance. So there's something going on there. Either the miners are getting ahead of themselves and realize gold might be due a correction, or this is an opportunity if gold's moving a lot higher. But again, I still favor the downside. And you can see, you know, pretty extreme overbought readings here on the RSI recently. Let's just circle that. You can see that cross above 70. You can see we had an overbought reading here with a pretty decent correction, pushed on to make a divergent high at that point, and then the big correction came. So again, it's all about risk reward, guys. And, you know, we don't always, sometimes overbought can become more overbought as it did here till we had this series of divergent highs, I should say, before the correction set in. And sometimes you have a single overbought reading. Well, we can go back here. We can see an overbought level there and then a pretty decent correction. So again, something to be concerned about is the fact we are overbought. Maybe we go on to make another wrong tool here. It is possible that the mining stocks can power up, especially if gold holds up, and then maybe we put in a lower high, make a divergent high there. Same thing with the PPO and or MACD here, and get some negative divergence. We don't have that right now, but we do have a trend line that was recently broken. And let's just go down to the 60-minute chart. because that's where I've put a lot of my focus recently on GDX. All right, I highlighted back here, and this was, what was that, early February, that we had a divergent high. I had two trend lines. I had this minor and then this more important purple uptrend line. And as you can see, we had a divergent high, and since then, those divergences have been playing out. The minors are moving lower. This is, by the most simple yet effective definition of a downtrend, that's what we're seeing in the gold mining stocks. A downtrend is simply defined as a security making a series of lower highs and lower lows. So there it is. You can see the downtrend, and until proven otherwise, that's, I would say gold is in a near or intermediate term, more so a near-term downtrend within an intermediate term uptrend. But being that we just put in that divergent high, this can stop anywhere. This is pretty decent support here around 23.53. But I could see this thing getting all the way down to this support zone down here around 29.80 or 21.80. And as I've stated, I'll let you guys know my thoughts when I think it's safe to jump back in the waters. But as of now, I'm looking down here. I see the trend indicators bearish. The MACD is below the zero line. That typically denotes the trend when the MACD, especially the signal line, the 9 EMA, when it's above the zero line as it was here, the trend is bullish, as you can see, and when it's below, the trend is bearish, as you can see. And right now we have a bearish trend indicator. We also have this 1333 histogram, bearish. It's been a little bit whippy lately, so I'm not putting too much stock into it. When I see whippy flatten, these indicators flattening out, but it is something to take note of. So again, the trend is down, confirmed by both the trend indicators and just a quick visual of the prices, and that's my take on the mining stocks. Okay, so to wrap this up, if anything changes, if I see any other significant developments, I'll do my best to communicate my thoughts ASAP. But until then, I'm just sitting back, keeping an eye on the mining stocks, as well as gold and the other precious metals, and maybe they even just trade sideways here for a little while. But again, it's all about risk reward, and I don't see a clearly objective long or short entry on the gold or the mining stocks right now. I'll keep you posted if I do. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.